Starbucks is down 14% this year. In this video, we're going to be looking at their financials, their dividend safety, and the possible problems they may have in the future. Starbucks is the largest coffeehouse chain in the entire world. They currently have over 32,000 stores in 80 different countries. Looking at Starbucks' 2024 guidance, I highlighted some of the main projections that they have. The first one is the U.S. comparable store sales growth. This and the global, they're both expected to grow between 5 and 7%, which means the stores that they have now, they're expecting those to grow 5 to 7%. And in China, they're expecting to grow 4 to 6 in the last couple quarters in 2024, but in Q1, they're expecting it to be higher than that. Then looking at the store growth, the US store growth they're expecting to be 4%, and the global store growth they're expecting 7%. But the really big one is the China store growth. They're expecting China to grow 13% this year. They're basically expecting that China grows 3 times as much as the US does this year. So as you can see, Starbucks is betting heavily on China store growth. And then the biggest thing is their earnings per share. Looking at the earnings per share, they're expecting a 15 to 20% growth in the earnings per share. Looking at the revenue grew from in 2014 being $16 billion to being $36 billion in 2023. So they've over doubled their revenue in the past 10 years. This equals a compound annual growth rate of 15% in the past 3 years and 8% in the past 5 years. The one thing you will notice in almost all of Starbucks financials is this dip in 2020. In 2020 was obviously COVID-19, in which Starbucks was not able to make nearly as much money as they normally do. So in almost all their metrics, they will have a slight dip in 2020, but they have rebounded very well and have continuously grown. Looking at Starbucks' revenue breakdown, 73% of it comes from the United States, 18% from some of the other countries, and 8% comes from China. They're trying to increase that revenue from China, as we're going to talk about later in the video. And then you see here where the revenue is coming from, which items, and it's mainly coming from the operated stores, which makes $29 billion in revenue this year. Looking at their net income has also increased since 2014. In 2014, it was $2.1 billion, and in 2023, it was $4.1 billion. But this chart obviously does not look nearly as good as the revenue. Obviously, in 2020, they had a big dip, only making $900 million in net income. But in general, it is increasing, but once again, the chart does not look nearly as good as the revenue. Looking at Starbucks' net margin, it's been all over the place. In 2018, it was as high as 19.3%, and in 2021, it was as low as 2.9%. But on average, it is around 10%, and they are currently at 11.5% net margin, which is better than normal. This directly correlates with their free cash flow. As you can see, the free cash flow is all over the place. It was as high as $10 billion in 2018, and it was as low as $100 million in 2020. Their last year, in 2023, their free cash flow was $3.7 billion, and they're expecting to grow a little bit, but as you can see, the chart is all over the place. Looking at Starbucks' dividend, they have a 2.46% dividend yield and a 61% payout ratio, which is slightly on the higher edge for restaurants, but that's still in a good range where they're only paying out 61% of their free cash flow in dividend. Looking at their dividend growth has been amazing. Since 2009, they started paying a dividend, and in the past 5 years, they've been growing at 10% per year, and their last 10 years, they've been growing it at 17% per year, which is considered very, very fast. The biggest risk factor to Starbucks and the biggest possible growth factor to Starbucks is China. Starbucks is expecting heavy growth in China. As you can see in the guidance, they're expecting 13% in the store growth, and they've been building tons and tons of stores in China to try to increase their size and exposure to it. Starbucks has recently opened their 6,000th location in China, and they're planning to open up to 9,000 stores by 2025. So as you can see, they're really pushing for the growth in China. And the second risk is the Chinese government. As you can see, Stellantis, which has Jeep, Apple, Hasbro's, and Volvo, are all trying to reduce their footprint in China. As there is so much political interference in China, it makes it much harder to operate a business, and companies are normally moving away to that. Starbucks, on the other hand, sees big growth factors in China, and they're hoping that the Chinese people start to drink more coffee than they do now, as the Chinese citizens currently drink only 6.2 cups of coffee per year, compared to the 62% of Americans that drink coffee daily. So they're really hoping that coffee really catches on in China, but if that doesn't work, it will be a big loss for them. So that is the biggest concern for Starbucks right now.